Hello everyone, welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the gas distribution sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The gas distribution sector of Indian share market comprises of companies involved in supply of natural gas to industrial, commercial, residential, and transportation sectors through city gas distribution networks. The sector is a key part of India's energy transition strategy, aiming to increase the share of natural gas in the energy mix from 6% to 15% by 2030. The key growth drivers of this sector include urbanization and infrastructure growth, cleaner energy shift, government push for CNG vehicles, industrial demand, and expansion of CGD networks. The government supports the sector with policies like National Gas Grid Expansion, City Gas Distribution Policy, PNGRB regulations, gas pricing reforms, and subsidy support. The major challenges for this sector includes high infrastructure costs, regulatory risks, supply constraints, land acquisition issues, and competition from other energy sources. So that's the summary of the sector. Now let's try to identify some trends in this sector using two graphs, yearly returns graph and monthly returns graph. I have analyzed the share price movement of last 10 years of top 8 companies of this sector and created these graphs based on the data. I have included only top 10 because the market cap of rest of the companies were less than 100 crore rupees. The top 8 companies of this sector comprises of 5 large cap and 5 mid cap and 1 small cap companies. Let's start with the graphs. So let's first look at the yearly returns graph. So this is the yearly returns graph. The green bars in this graph shows the positive yearly returns. The red graph shows the negative yearly returns. The orange line down at the bottom shows the cumulative returns. The green line shows number of months with positive returns, whereas the red line shows number of months with negative returns. Let's start with 2015. So in 2015, this sector gave meager returns of only 6.06% with 8 positive months and 4 negative months. The returns improved in 2016, and the sector managed to give average returns of 21.69% in 2016 with 6 positive and 6 negative months. 2017 was a very good year for this sector. The sector managed to give returns of 60.94% in that year with 9 positive months and 3 negative months. But in 2018, the sector gave negative returns of minus 14.55% with 8 negative months and 4 positive months. In 2019, the sector gave good returns of 32.58% with 7 positive and 5 negative months. 2020 was similar to 2019 with 31.83% returns and again 7 positive months and 5 negative months. 2021 was an extremely good year for this sector as the sector managed to give returns of 57.78% in that year, again with 7 positive months and 5 negative months. In 2022, the returns declined significantly, and the sector managed to give very meager returns of only 11.38% in that year with 8 positive months and 4 negative months. In 2023, the sector gave negligible returns of 1.95% in the entire year with 6 positive and 6 negative months. And in 2024, again, the sector performed very poorly and gave returns only of 7.11% with 6 positive and 6 negative months again. If we follow the orange line over here, we can see in the last 10 years the cumulative returns are 495.32%, which is just shy of 6x. So although not very bad returns, but still nowhere close to good returns as well. Let's see the key takeaways. Cumulative returns around 6x, so below average returns. CAGR of 19.53%. Now 19.53 is just on the brink of an average returns. Don't get me wrong, it's not a bad return at all, but several sectors have better returns, and better CAGR than 19.53 for the last 10 years. Net negative year return is just one times, that is in 2018, and this is a huge positive thing for this sector. In the last 10 years, it has given negative returns only once. So those who seek low risk, this sector is for them, surely. Best year was 2017. 2017 was best year with 60.94% returns, and the worst year was 2018 with minus 14.55% returns. Positive to negative year ratio is 9 is to 1. Extremely good. Clearly, the top sector in this. Very few, just I think two or three sectors are there in the entire list of 60 or 70 odd sectors, uh, which have this higher value of this ratio. So extremely good in that sense. Let's move on to the monthly returns graph. So this is it, and the green bars over here shows positive mean monthly returns. The red bar shows the negative mean monthly returns. The green line shows number of years with positive returns, and the red line shows number of years with negative returns. Let's start with January. So in January, the average monthly returns are negligible, 0.65%. So a flat month with six negative years and four positive years. February, a bad month for this sector with minus 1.32% average monthly returns, seven negative years and three positive years. March, a relatively better month for this sector with 1.91% average monthly returns, seven positive years and three negative years. April, clearly the best month for this sector with 5.07% returns with 10 positive out of 10. So hundreds of percent positive return rate in the month of April for this sector. May, average month with 1.12% returns, six negative years, four positive years. June, almost a flattish month with 0.79% returns, five positive, five negative years. July, a relatively good month with 3.01% average returns, seven positive years and three negative years. August, too, similar to July, almost 3% returns, 2.99% average monthly returns, six positive years and four negative years. But September is clearly a very bad month for this sector with minus 1.95% average monthly returns, eight negative years and only two positive years in the last 10 years for this sector in the month of September. October, just above average month with 1.24% average monthly returns, seven positive years and three negative years. November, though, is a strong month for this sector with 3.97% average monthly returns, six positive years and four negative years. December, too, a strong month with 3.44% returns, seven positive years and three negative years. So all in all, same impression that I've got on by seeing the yearly returns graph. This is a defensive sector. You see only two negative months, and that two are not an extreme negative returns. So surely a defensive sector, evergreen sector, but with low returns. Let's see the key takeaways. Cheaper months are February and September. So the 2 months with the average negative monthly returns, February with 1.32 and September with minus 1.95. So minus 1.32 and minus 1.95. These 2 months, February and September, are the cheaper months. Couple of other months like January and June too can be considered as cheaper months as they are almost the flat months with negligible returns. Costlier months includes April, November, and December. So April with 5.07, November with 3.97, and December with 3.44. And positive to negative month ratio is 1.31 is to 1. That is 1.31 positive months against each one negative month. So not the worst, not the best, an average number. So that is all from my side in this video. Thanks for watching it. And if you've liked the content, click the like button, subscribe to the channel, and share it with your family and friends. I'll be back soon with another video, and goodbye for now.